So I spent 11 years in the military. I was in the Air Force stationed in Japan and then in Andrews Air Force Base and then Bowling Air Force Base. And during that time, I've made a lot of pretty big financial mistakes, but I've also made some really good financial decisions that I'm still benefiting from today, even though I've been out of the military for a long time. And so today I'm doing a special live stream, and that's really what I want to talk about is financial decisions for service members and veterans and kind of what those right decisions are. And so I recently came across another YouTuber who's actually an active duty service member in the Army stationed here in Maryland. And he's making a lot of very good financial decisions. And he's actually making a lot of the very same financial decisions that I've been making recently. And so I knew I wanted to have him on here on the channel and just kind of talk about investing, talk about the VA loan, about buying a home, and kind of what the right financial moves are for active duty service members as well as veterans. So without any further ado, Austin, how are you, man? Thanks so much for joining me today. Uh-oh, you muted your phone. You muted your mic. It's still muted. There we go.
Yeah, there we go. What's up, Malcolm?
Yeah, how are you, man?
Good. How are you?
Happy to be here. So tell me, so where are you stationed and what service are you in?
Yeah, so I'm stationed here in Maryland and Silver Spring, so it's not really a post. It's kind of like a private garrison type thing with the research facility. I'm in the Army active duty.
Nice, man. And how long have you been in the Army for?
I've been in the Army for now 5.5 years.
Nice, dude. I mean, that's great that you're making these right moves so early in your career. I made a lot of dumb moves at the beginning of my career. I didn't really start making the right ones until I was in there a little bit longer. But yeah, Maryland's got we got a bunch of military bases here and then a bunch of little small installations kind of scattered throughout. So it sounds like you're in one of those installations there. And so you recently bought your very first home using the VA loan. Can you tell us a little bit about that? What do the numbers look like on that?
Yeah, so I got a property for, it's $300,000, very under market value. It was crazy to find, especially in a market like this where it's just extremely competitive. I mean, we went through so many homes that just, we got bought out and got outbid on. So the numbers are 300,000. We got it in for an appraisal at 310, and then it's going to cost me around $1,500 after everything for the mortgage. And
okay, so 1,500, is that all in your closing costs, or is that including the VA funding fee?
Oh, the closing costs altogether out of pocket was $7,500.
Okay, so were you nervous at all about buying in this current market? I have a lot of people that reach out to me and be like, dude, the market's going to crash. There's no way. It's only a fool would get into the market right now. What are your thoughts on that? And why were you still confident enough to go forward and purchase a home today in 2020?
Honestly, I was terrified. I mean, as any other beginner would be, just because one, it's what's going on right now, and two, everybody's saying you see on YouTube a lot that market's going to crash, everything's going to crash, blah blah blah. But and at the end of the day, there's always going to be an increase, decrease. But if you look at the graph, it's always going to go up. And I'm not all about timing the market. And timing the market, I feel like you just miss out on gains anyways. And when you finally do your research and you finally learn, you just got to take action at some point. And when it comes to getting in that analysis paralysis type thing, you can always kind of scare yourself either with the market, or maybe you don't have enough money, or maybe you're not prepared enough. You just got to kind of take that first step. And that's what I really preach to a lot of the people that watch my videos is you just got to take that first step, and it gets a little bit easier every single time.
Yeah, man, I 100% agree with that. And analysis paralysis is a very real thing. And I mean, the truth is, you could have bought at the peak of the market in 2006, and today you would still have a huge amount of equity in your property. And I tell people, don't try to time the market. If you want to play stocks and try to time the stock market or the cryptocurrency market, have at it. But when it comes to real estate, you don't try to time the real estate market. Buy when it's most convenient for you and your family. And I mean, the truth is, real estate market is much more steady than the stock market and everything else. And it's almost always goes up, especially on a long enough timeline. if you look at properties that are selling for $500,000 today, they were selling for $98,000 in the 1970s and 1980s. So on average, home values go up 3% a year, and that is very, very consistent. So I am very confident that 30 years from now, 20 years from now, 10 years from now, your home is going to be worth so much more than it is today. Even 5 years from now, I'm very confident it's going to be worth much more than it is today. Now, 3 months from now, 6 months from now, I'm not quite as certain about that, but we'll see. And so, tell us about the decision to. So, were you living on post before this?
So it's kind of considered like the same thing as if you would be living on post. It's privatized housing, but like I said, I'm not really in a post. So what they did was they contracted a place around here that they give military the ability to just dump their BAH for rent, even though the rent is like $2,800. I make like $2,300 in BAH, so they just took that and they said, "Hey, you can live here for free." And every time I got my LES, I would just look at that $2,300 going out, and I was just like, it was breaking my heart.
Yeah, $2,300. That's pretty good for BAH. We got some pretty high BAHs here in Maryland.
Yeah.
All right, so you moved off base, you bought a home. Now you're getting that $2,300 a month. And what did you say your mortgage was?
Mortgage, everything is about $1,500 rounded up. It's like $1,480, but yeah, $1,500.
I mean, that's huge, man. That's money in your pocket right there.
Yeah.
Even when you factor in, so your mortgage is your principal, your insurance, your taxes, and the interest on your principal. So even when you factor in, your utility cost and your home maintenance, like you're still making a profit every single month by taking advantage of that. And how's your house compared to the housing that you had before? Is it bigger? Is it smaller?
It has its pros and cons. It's probably a little smaller. It's still a 3-bedroom, just like this place is, but it's just there's a lot more space in this townhome that I'm living in. But one of the best things that sold me is it has a yard,
right?
Because I'm in Silver Spring, and it's kind of like very crowded and everything. And I have I have a German Shepherd, so when it comes to having them go around, we have to go to the parks and stuff. But here, there's yard, patio. It's probably a little smaller, but at the end of the day, I'm buying a property that's going to grow my money instead of having a little bit of creature comforts here that I don't necessarily need, especially being as young as I am.
Right. Yeah. So, I mean, even if it is a little bit smaller, you're still, you got that bigger yard, you're banking, $800 a month profit. And every single mortgage payment that you're making, you're making building equity in your property with every single mortgage payment. And you have an appreciating asset, right? Homes typically appreciate 3% a year. In the last 12 months, they've actually appreciated 16%, which is crazy. So if you would have purchased that home last year, let's say, with that 16% appreciation, I mean, I'm terrible at math, but that's like $40,000, $50,000 in equity that you would have built in the last 12 months if you would have bought that last year. But I have a feeling that home values are still going to keep going up for the next few months. So you kind of caught it on the tail end, but you may still get some appreciation from that. And you also decided to buy instead of rent as well. Did you look at any rentals? Did that ever occur to you?
Yeah. So one thing that really came to me was, I'm getting out of the military in a year and a half. And even if I just build like a year and a half of equity in a house, like it's still not going to be like amazing if I were trying to sell it. But then I was listening to Bigger Pockets, and it just kind of like flipped my switch. I was like, you know what, like I could still live somewhere else, Ohio, Tennessee, wherever I choose to after this. And I can just, let a company, manage it for me while I still get rent from it, because that's my biggest thing is, I love buy and hold. I love the ability to, buy property and just hold it. And I don't want to really sell it. I'm not really into that right now. But yeah, when it came to that, I was just like, I mean, what's a few extra dollars a month that I can just pay a company to do it for me, so I don't have to be tied down to that actual location,
Right. And so your plan is to turn this into a rental property after you PCS or after you get out of the military and you go back home, right? Yeah, I love that. So my favorite strategy to purchase your first rental property is to purchase it as your primary residence. And the reason for that is that you can then use these government loans to purchase rental property. So you got to use a VA loan, or you can use an FHA loan or USDA loan, one of these other really powerful loans, and you're getting a much lower interest rate. If you purchase a home strictly as an investment property, you're going to pay a higher interest rate for that because there's more risk. Generally, they want you to put 20% down. So you're getting that primary residence interest rate of probably like 2.75%, something really low like that. And you're buying it 100% down, and you're going to have a appreciating asset, and you're getting a rental property out of that, which is awesome. And I love that. Have you looked up how much you think you can get in rent for that?
Yeah. So another amazing thing that it just keeps getting better with this property is there is a giant room in the downstairs that can be easily converted into another bedroom. All I got to do is add a closet and a door, and it's done. It already has a window, it has all that other stuff that you need for coding. So when it comes to this property, just a 3-bedroom house, which is what it can rent for about 24, 25. But if I add that other bedroom, it can go all the way up to 26, 27.
Dude, I love that. So now what you're talking about is house hacking, right? Which is a term I believe from Brendan Fraser. No, Brendan, or the guy from Bigger Pockets who does the.
Oh yeah, big beardy Brendan there.
Yeah. So he came up with this term house hacking, which is essentially turning a portion of your house into a rental suite. So is that your plan? Are you planning on having a roommate, or allocating like the downstairs of your townhouse to have a little rental suite down there?
Yeah, so it has a extra bedroom. So what I was going to do is just look for a roommate. But when it comes to advertising for a roommate, I was wanting to just say, hey, yeah, you're my roommate, but we can share, everything like kitchen. I'll even give you my Wi-Fi password. I don't care. And yeah, just get a roommate to get some house hacking, and it would almost pay for my mortgage. It rents around here just for a room about $850 to $900.
Yeah, I mean there's really 2 ways to go about doing it. One, you could just have a roommate and you guys share the living room, you share the bathrooms, you share the kitchen, all that stuff. And the other way is that you could have a rental suite. So maybe you put up a new wall in your downstairs and say, hey man, the downstairs is all yours. Here's a little kitchenette that you can have. And either way, yeah, you could probably get $700, $800, $900 a month in that area, which is like half of your mortgage payment right there, which is amazing. Now, here's where it gets tricky though. When you move out, that area is probably not zoned for multi-housing, if I had to guess. And you can't technically have turn a single family property into 2 different rental suites. But if you are living there, then you can have a rental suite attached to it. They just can't both be rental suites. So when you do eventually rent it out, you're going to have to rent it out as a single family rather than a multifamily. Multifamilies are just not that common here in Maryland for whatever reason. There's a handful of them up in Baltimore, but for the most part, this area is just not zoned for multifamily. So we do have a comment here. Turning into a rental after transferring using the VA loan is awesome. If you exit the military and get 10% disability, I believe the next house you get with the VA, they waive the funding fee. Yes, that is very true. So if you have or if you're classified as VA disability, which I am, and actually a lot of people are, even if you're at 0% VA disability, you're still a disabled veteran, you don't have to pay the VA funding fee. And the VA funding fee, I believe it's 2.3% of the purchase price, and they typically add that onto the loan. And it's like 2.3% the first time you use it, and then I think it goes up the second time you use the loan. So, on a $300,000 house, that's like $10,000 that would get added to your loan, and they do waive that if you are a disabled veteran. And I believe if you're a Purple Heart recipient and still active duty, they waive it for you as well. There's a couple other specific situations. Now, another thing, go ahead. Yeah.
Even if you buy the property and you're not, if you're still active duty and you're not getting disability, you can still, once you get out of the military and you get at least 10%, all you got to do is have that letter, give it to your previous lender, whoever, and they can apply that to the house that you already have, and you just get that added to your principal. So for my case, I have I think it was $6,900 VA funding fee. So when I get out, I think I could at least qualify for 10%. All I do is just submit that to, you know, my lending officer, and then they put that towards the principal of my property. So it's just a free
Oh, dude, I love that. I never knew that.
Yeah.
I'm gonna have to reach out to my lender then, because I still have a
you
house.
just gotta submit it.
Yeah, I've got a house that I purchased when I was still active duty, and yeah, I'll have to look into that, see if I can get you know, whatever that it'd be a couple grand for me that I can get off that. Now, another thing that I love that you did is that you probably could have qualified for like $600,000 or something crazy. You could have qualified for probably a much more expensive house than you actually did. You went with a $300,000 house. And why I love that, whether you may not be aware of this or not, but what that means is that you probably could use the VA loan again to purchase another property. And so let me explain to everybody kind of how that works, because this gets really complicated, kind of complicated. And they actually just updated the rules about the VA loan this year in 2020. So with the new rules, they don't have a cap on how much you can purchase for your primary residence. Instead, it's going to be based off of your income, like if you can qualify for that loan. So you can literally take out $1 million loan using a VA loan. And it didn't used to be that way. What it used to be was that every county that you go to has a specific cap, and you can only take up to that cap based on that county. And that's really based on the average cost of the house. But now they still have that cap, but that's if you want to purchase a second home using the VA loan. Both those loans together can't equal up more than whatever that cap is on that county. This is called your VA entitlement. And you can actually Google this. You can find a sheet of your VA entitlement. And I believe in Anne Arundel County, which is where you purchase, it's something like $625,000. So I just purchased my second house. Both my homes are using the VA loan. They're actually both in the same city. And the first house I purchased in 2010, and I purchased for $210,000. I think I owe $180,000 on it. So because that is well below the $600,000 cap, I had like $400,000 remaining on my entitlement. So I just purchased my second house for about $400,000. And because both of those are below that cap. And so it gets really tricky, but that's known as your VA entitlement. And because you only purchase a $300,000 house, that means that you have 50% of your VA entitlement left. So when you go back to Ohio or wherever you go, they're going to look at what the maximum cap is for your county, multiply it by what percentage of your VA entitlement you have left, and then that's how much you can qualify to purchase another property using your VA loan. So you very well could buy another house in a year or two after you get out using your VA loan and still pay zero down. Yeah. All right, I know that's a mouthful there.
Yeah, it's definitely a lot of different stuff. And even then with that, what you can do is, say you do live in a place, but you're kind of like riding that line. So if I have a $300,000 limit somewhere else, but that VA loan can't fully, cover that house, what they can do is, cover part of it. Then you just have to front the rest. So and that's not a lot of people know that, is that there's a huge myth out there that when you use the VA loan, you can only use it one time or just for your primary residence or whatever. But if you meet that one year minimum requirement and then you want to live somewhere else, you can fully do that as long as you're within that budget.
Yeah, absolutely, man. I mean, you can, they try to find ways or like a justification for you to move up. But if you just say, hey, I got a growing family and need a bigger house, that's good enough to justify it. So I have a question here. How do you transfer your rental into your business name to then free up yourself into buying a new home under your primary residence? So actually, I don't know about that. I've never actually transferred any of my rental properties into a VA loan. But like we just pointed out, you can purchase two different properties as long as you're both below that cap. And let's say you only have $200,000 in VA entitlement, like Austin just pointed out, you could take out a $200,000 VA loan, and then they would tack on an additional maybe $100,000 conventional loan so that you can purchase a $300,000 loan. So you can have two different loan programs there. And another thing you could do is you could refinance your current home into a different type of loan. So you could refinance it into an FHA loan or conventional loan, and that would then free up your VA entitlement so you can go on to purchase another property.
Yeah.
I'm the veteran that emailed you the question earlier. Well, hey man, yeah, thanks for joining us. And then another thing that I really love that you did, how long of a commute do you think you have from your property in Pasadena up to Walter Reed?
Yeah, so it's probably roughly 35, 40-ish minutes. So that's another negative with this property is with the place I live in now, it's literally right down the road. It's like 10-minute drive.
Right.
But, they even talk about that on the Bigger Pockets too, that sometimes, sacrificing a little temporary comfort for just so many upsides, it's kind of like, would I rather drive 40 minutes down and back and then make all this money, or do I want to live here and have nothing appreciating, nothing growing for me? It's just you gotta give or take, and in this, the
Right.
pros definitely outweigh the cons with just driving.
Yeah, I mean, like what you're doing in order to really like take advantage of the VA loan and get an investment property and house hacking, it is inconvenient. It is kind of a pain in the neck, and a lot of people are just not willing to do that. I mean, that's the truth. Most people are not willing to do the hard stuff to get ahead financially. I tell people like, yeah, man, you can absolutely invest in properties using the VA loan, but you have to buy it as your primary residence, live in there for at least a year, and then move out and purchase another property. And people are like, oh, I don't feel like doing that. And, they never take advantage of this great program. Yeah. So this is going to be your first rental property. What's your goal? How many rental properties are you hoping to have?
It kind of varies because, every property that you want to buy, there's always a different number, different scenario, different market, all that. But just a very generic goal, I would say I would feel pretty accomplished if I could at least get 10 doors. And then from there, I could move forward with, other things, other creative financing ways on getting property. But if I get that magic number of 10, I think I'll be like, yeah, I'm a real estate investor. But right now, I just can't really say, but yeah, 10 doors is what I think my goal would be.
Yeah, man, if you got 10 doors, you'd be guaranteed to retire as a millionaire. Like I can guarantee it. Honestly, you could probably retire as a millionaire with just 2 or 3 houses. So I purchased, I walked in a very similar path that you're walking. And I purchased my first property in 2010. I purchased it for $210,000 using the VA loan. It was a small townhouse and I lived in there. And that townhouse now 10 years later is worth about $280,000. So I've gained $70,000 in equity just from appreciation, just at appreciating 3% a year. And I now owe $180,000 on that loan. So I've gained $30,000 in equity just by paying off my mortgage. So just owning the property, not fixing it up, not doing anything, just owning that property, making that payment, I've gained $100,000 in equity in just 10 years just by owning that property. And so with your $300,000 house, like you're going to get there even quicker because at that higher price, you're going to benefit more from that appreciation. So in 10 years from now, you're going to have at least $100,000 in equity in that. And it's like guaranteed. Like if you own rental properties like this, you can literally just figure out exactly what your net worth is going to be in 5 years, 10 years, 20 years. And if you can just keep a tenant in there for the next 30 years, you're going to have an asset completely paid off. It's probably going to double in value in 30 years. And you're just going to have these rent checks coming in every single month. Yeah. And just recently, just last month, we actually increased the rent on our property. That's the first time we ever increased it. We used to get $1,800 a month for it. We increased it up to $1,900 a month. And that's another thing a lot of people don't think about is like every 5 years or so, your rent is going to go up. That also increases throughout the years. And so we get $1,900 a month for our rental here in Annapolis, and our mortgage is only $1,350 a month on that. So we've got a huge like profit margin on that. Yeah. And I mean, that's exactly the same path that you're walking right now. As soon as you move out and get a tenant in there. So I love that. So, all right, man. So we talked about the VA loan and house hacking and rental properties, but you're also pretty passionate about investing in stocks and everything else, right? What are you doing today with in terms of investing in stocks, bonds, anything else like that?
Yeah, so one of the strategies I use, which is 99% of what I do, is DGI, dividend growth investing. And that's really what opened my door to investing in general. That's what got me into real estate investing. That's what got me into, all these other crazy avenues that we can use to grow our money. And I use M1 Finance. That's my primary brokerage that I use. I used to use Robinhood, but I think as far as if you do want to, pursue DGI, that M1 has a really good format, a really good way to invest very passively. And I think that as far as DGI goes, I'm not going to be using that as something that's going to make me a millionaire in a few years, because it's a get rich slow method. But that's really what I've been doing for about a year and a half ish now, and roughly have about 30,000 invested in the market. Very boring stocks, very boring, but it's what makes very good money, and it's a hedge against inflation. It beats a savings account, that's for sure. And then you got that appreciation too, that if you ever do want to eventually sell, you're making money through dividends and you're making money through appreciation. And that's what I really couldn't get my mind around when it comes to just people buying stocks that don't provide a dividend, is because, yeah, you can have that appreciation, but you don't make anything while holding that. You just make that capital gain for later on down the road.
Can you tell people a bit more about that? Like, what is a dividend, and what you call it, DGI? What is that exactly? I think a lot of people may not be familiar with those terms.
Is basically when you say I pay $20 to own this company, and this company wants to pay their shareholders a part of their profit. That's what a dividend is, and it just trickles down to everybody that owns that share. So if I pay $20 for a share and they give me 50 cents a quarter in dividends. Now that's another thing, is companies can choose when they pay these dividends. So it could be quarterly, which is about 70 to 80% of the stocks out there. That's when they pay. Someone pay monthly, someone pays semi-annually, like I know Disney does that. And then and the other thing is to make sure to know that it's not guaranteed. Tomorrow, all the companies that I own in my portfolio could say, hey, we're not paying a dividend anymore. But that's where it comes with DGI. DGI, dividend growth investing, is you choose companies that have consistently paid their dividends throughout the years and have also grown their dividends. So if a company that I pay $20 for, that they give me 50 cents a quarter, 2 or 3 years down the road, I want that company to pay me $1 a quarter, $1.50. I want them to slowly grow that dividend. So even if I just put $20,000 in the market today, to 2 or 3 years down the road, that income that I'm getting from the dividend, it's always going to increase, because not only with that money that's being reinvested, but also they're really good profitable companies, so they're choosing to constantly increase that dividend. So it's like you're getting pay raises every year and you're not doing anything for it. Whether it's when you work at a W-2 job and you get maybe a few cents every year, who knows, you're getting dollars every year that you don't even do anything for. You don't have to buy more shares, and it just constantly increases your net worth. And it's a really good, powerful way in the background to park a lot of your money.
Yeah, I mean, so dividend investing, it's sort of a form of passive income. Like every single month, you're getting checks in the mail. They're not huge checks typically, unless you have a lot of money in there. But a lot of the most popular companies that they pay a dividend. They pay you for holding on to those stocks. And a lot of index funds as well pay you for holding on to the index funds. So if you just own one that I really like is VOO, VOO, and that's the Vanguard S&P 500 index fund, whatever it's called. But I think they pay you almost 2% a year. So if you have $100,000 in this Vanguard investment stock that pays you a 2% dividend, that's $2,000 a year that they're paying you just for holding on to those stocks. And so, yeah, dividend investing is definitely, once I kind of got my eyes open to that as well, I was like, whoa, why have I not been doing this? And it's like a guarantee return. So let's say the markets, if they go up, you make more money. If they stay neutral and the markets just go straight across, you're still making money on your investments. And they can even dip slightly, but because you're making that 2% every year, it could even go down slightly in value, but you're still making money. And what a lot of times people do is they automatically reinvest those dividends, so the amount of shares that you hold just grows. And what I like about it is, even if the market starts going down, that's kind of a good thing, because typically you still keep getting that dividend money, but you're reinvesting it. So you're just buying that stocks at a lower price. So when the market goes down, I'm like, hey, great, I'm buying more stocks at a lower price automatically. And so you mentioned M1 Finance and Robinhood, and another one I throw in there is Webull. And these are all free brokerages, which means that you can buy and sell stocks completely free. They don't charge you any transaction fees or anything like that. And a lot of brokerages, they may charge you up to $10 every time you want to buy and sell a stock. I have a USAA account. I think they used to charge me like $7, $8 every time I buy or sell a stock, which is crazy. And I never really realized that when I was younger. And the problem with that is it makes it much harder for you to invest small amounts of money. If you're investing $100, but you have to spend $7 to make that investment, you're automatically losing 7% of your investment. You know, it only makes sense if you buy like $1,000, $10,000 at a time. So there's kind of a new wave of these free brokerages, and it's becoming kind of a growing trend amongst investment brokerages to not charge fees anymore. But M1 Finance is a great one. Yeah, Webull is another free one, and then Robinhood's another free one. And by the way, I do have affiliate links for all three of those down in the description below. I'm sure Austin does over in his channel as well. I wouldn't be surprised. So, have you started doing that? Do you have affiliate links for those programs or anything else in your channel?
When they were going to special, actually, M1 was a couple months ago. You get $20 instead of $10. I was blowing that up.
Yeah.
Video, I was making sure I had a few. Yeah, it's pretty good.
Yeah, so with Webull, if you sign up for Webull, you get 4 free stocks with them. Like they literally give you some free stocks. Same thing with Robinhood. I think they give you 1 or 2 free stocks. And I got a couple of big ones. I got like $150 Microsoft stocks maybe a month or 2 ago from that. But honestly, out of all three of them, all three of these brokerages, the one that I like the most actually has the worst affiliate program, but it's only $10, but it's M1 Finance. And I started investing with M1 Finance, and I'm really enjoying it. It kind of opened up my eyes to this new strategy of dollar cost averaging pretty much into it. Now you use M1 Finance as well, right? That's kind of your brokerage of choice?
Yeah, that's my bread and butter when it comes to DGI, just because, like you said, it really makes the process super simple, especially once you find the companies that you want to invest in and the companies that you think are definitely going to, just keep doing the DGI method. You just throw money into the pie. You don't have to say, I want to specifically have 5 shares of this and 2 shares of this. You can just allocate the percentages just like the TSP does. And it just makes it way more streamlined than Robinhood or any other ones.
Yeah. So with M1 Finance, how it's set up is that you have a pie, and within that pie, you can have, I guess, smaller pies. But you could say, okay, I'm going to put $100 into my pie. And within that, I want it to go 60% into this other pie. And this pie has 5 stocks within it. And I want 40% of that $100 to go to this pie. And that pie has 10 stocks in it. And it evenly distributes that $100 over all these stocks, however you have that split up. And they also do fractional shares with M1 Finance. You can invest in a stock with as little as $1, which a lot of brokerages don't do. So that $100, you could literally spread that out over like, I don't know, 100 different companies if you wanted to. So it allows you to really diversify your portfolio. And I love that you don't have to invest like there's a lot of companies are like $300 a stock. So I love that you don't have to have $300 to buy 1 share. I love that they do the fractional shares with M1 Finance. And I just automatically, what I'm doing right now is $400 a week goes into my M1 Finance account, and it automatically splits it up amongst all these different companies and everything. So what about index funds? Do you invest a lot of index funds, or do you really focus on individual companies that you pick?
When it comes to index funds, I think that your return, and you have to expect this, right? When you have an index fund that's managing a lot of stocks for you, you have to kind of expect that the return's going to be a little low, but it's very safe. So when people talk about, hey, invest in bonds, invest in things that are going to keep you safe, I don't necessarily like that because the returns are not that big. But when it comes to an ETF, I kind of treat my ETFs like a bond. So I only invest in a few. My IRA has the most bonds, but when it comes to my taxable individual account, I just use SPHD, VTI, And those are the two only that I really use. And I wouldn't really suggest SPHD if you're looking for long-term appreciation. That's just a very good monthly ETF that pays consistently and has done that for a while now. But as far as ETFs in general with the DGI method, there are a ton that are great. I just think that where I'm so young, I like to choose individual stocks that I think is going to have a better, return on my investment versus just an ETF.
Right. So you mentioned VTI. So that's a stock symbol that you guys can go out and you can go and buy shares in VTI. Is that the Vanguard Total Market Index? So okay.
Yeah.
So that covers all of the market. And so Vanguard also has one, I believe it's VOO, VOO,
Yep.
and I believe that matches the S&P 500. And it's also an index fund. And Warren Buffett preaches, just throw money in the S&P 500. Don't try to pick all these little stocks. Just put money in the S&P 500. And what that essentially is, it's pretty much the top 500 most profitable countries in America. And if a company is not as profitable, they kick it out of the S&P 500, bring in a new company. So it was a big headline lately that Tesla is being added to the S&P 500, and they're actually kicking out some of the less profitable companies. So Tesla is soon going to be in the S&P 500. And so if you want just the simplest strategy, you just want to invest in the top companies in America, just search for the ticker symbol VOO. And that's just the top 500 most profitable companies. And then VTI is a little bit more diversified. And then another good one is Vanguard has a Vanguard high dividend ETF as well. And I also invest in that one. I think it's like a 3% return, a 3% dividend that they pay on that. What's that?
VIG, is that the one? VIG?
It could be. Yeah. Vanguard. Yeah. Anyway, it's all dividend paying companies. There's a couple other ones that have other markets as well, but Vanguard, just look up Vanguard. They've got a couple really good, they're pretty much buckets of companies. And by investing in this one ticker symbol, you're diversifying in all these other companies and different sectors. But that's one that I really like. So before we so we talked about some good things here. What are some financial mistakes that you see service members making, or that you've made in your kind of career and your investment lifespan there? Have you made any big mistakes? I've got one very big mistake I'm going to touch on here in a moment. But what are some of the mistakes that you've made?
So when I first, this was a PFC clerk at the time, right? This was me being in the military for about 2 years. And I had this car that I had throughout my high school, and it was a great car. There was no reason for me to get rid of it. It was paid off, cheap insurance, and I was like, man, I just want a V8. I just want something with a V8, right? I want to have this cool guy car. And I went out and bought a Charger, did the most stereotypical, young soldier type thing, and it was 15% interest. I was paying all the way up until I sold it, mostly interest, very little principal. And but luckily, I took really good care of it. I sold it and I only lost $3,000 throughout the whole process. So I got very lucky there, but I do not suggest doing that at all. And then the other huge financial thing that I did was I just kept my money in a savings account.
Right.
And, well, that's not, something crazy that a lot of people wouldn't think about. When it comes to the military and finance, they don't really mesh too good together. They don't really have a lot of good, in my opinion, they've never had a lot of good financial classes because they just mostly speak on debt and saving money, right? And for probably a good 2 years after that whole scenario, leading up until just a year ago, I just had money sitting in a savings account. I just had it sitting there losing value, I was like, oh yeah, I'm getting $20 in interest. But in reality, I could be making so much more if I put it in just a portfolio that would grow my money. So yeah, I think the two biggest mistakes I've ever made was buying a car that I just did not need, that was taking money out of my pocket at a super high interest rate, and dumping my money somewhere that's just not really growing at all.
Yeah, man, you touch on a good point about having your money in a savings account. Robert Kiyosaki says, if you're a saver, you're a loser. And that sounds really harsh, but so inflation is something that's really kind of confusing and hard for people to grasp in their minds right now. But let's say you had $100,000 sitting in a savings account. Because of inflation, right now we're seeing about 2% inflation a year. In the past, we've seen like 3%, 4% inflation. Right now, we're seeing about 2% inflation. That means your money is losing 2% of its value every single year. So if you have $100,000 in a savings account, it's losing 2% of its value every year. And because the Fed just lowered their federal lending rate to pretty much zero, mortgage interest rates have come way down, credit card interest rates have come way down, but your savings account interest rate has come way down to practically nothing as well. I mean, it's like 0.01 for USAA. It's nothing. It doesn't keep up with inflation. So what that means, if you're holding on to that money, you're losing money every single day. It's crazy. On the flip side of that, over the last 10 years, probably longer than that, probably like last, I don't know what the timeline is, probably like 40, 50 years, just investing in the S&P 500, you would have seen a return of about 9% on your money every single year. 9% of your money every single year. So that $100,000 would have earned you $9,000 just by investing it in VOO or one of these other S&P 500 index funds. And it's a little bit lower than that. It's really like 7% a year, but you also get like a 2% dividend. If you reinvest that, it's like 9% growth. So you don't just sit on your money. Put it in the stock market, in diversified index fund, diversified portfolio. Put it into real estate, some sort of appreciating asset, not just sitting there depreciating because of inflation. That's kind of one thing I would tell people. So I'm gonna tell you my biggest mistake. Really got two big mistakes that I made when I was younger. I was in my early 20s in the military. The first one is I always thought that it was just normal to have credit card debt. And I always had just like $10,000 in credit card debt, just kind of looming there. And I always just thought that it was normal. My parents all have credit card debt. All my friends and family have credit card debt. And, a weird thing happens that the more you put on your credit card, the more money you save on your savings account. So you feel like you're making progress because your saving account keeps going up. And you don't really look at the credit card debt, which is also keep going up. And then one day I walked into a bank and I had a completely aha moment. And the bank, there was a sign that said, our savings account will pay you 0.5% interest on your savings account. And then on the same sign, it says, our credit cards are only going to charge you 23% to borrow our money from us. So they'll give you 0.5% or even lower than that now on if you give them your money. But when they give you their money, you have to pay them 23% interest. And I just had this aha moment that I had $10,000 in credit card debt and I had like $10,000 in my savings account, but really I had less than zero because I'm actually paying them for that privilege of borrowing that money. And once I had that realization, I never ever had credit card debt again. It's one of the stupidest things that you can do, and you want to get out of credit card debt as soon as you can. That is just terrible. So that's one big mistake that I made. Another big mistake I made was not investing in a 401k soon enough, right? I joined the military in 2006. In 2008, we had a pretty big stock market crash, and that terrified me. And I always thought that, man, there's going to be another stock market crash right around the corner, And because of that, I never invested. And I missed out on the biggest bull run in United States history. Right, the market typically goes up for about 8 years before a correction. That the market's been going up since 2008, so 12 years now. The market's been going up nonstop. If I would have just started investing in 2006, dollar cost average, which essentially just means just invest every single week, I would have made so much money. And what I didn't really realize was I was always like, man, if I'm putting in a 401k, I can't really touch it. It's not quite true. You can take out loans against your 401k at very, very low interest rates. And I believe even right now with whole situation where the country is facing, I can't say the word on YouTube, but because of that whole situation, I think you can actually take money out of your 401k and not be penalized for it. And that's kind of the biggest regret that I made, was not investing in the TSP and just investing in the stock market. And I missed out on the biggest bull run in United States history. And I'm not doing that anymore. Even though we may have another market crash with the stock market, like, I don't care. I'm just going to keep throwing money into it, just keep investing. And on a long enough timeline, you're going to make a positive return on that. So off my box there. So are you investing every week or every month into the stock market?
Yes. So I used to, before I was getting prepared to buy this property, I was putting roughly about 200, maybe 300 a week in my M1 portfolio. I was doing it very aggressively. And then I was like, okay, now I got to kind of slow down a little bit and build up some capital for any type of closing costs I may need, anything that maybe I want to fix up, like right when I get in, whatever. So I haven't been as aggressive lately. And I also did that on purpose because I didn't know what to expect with this election. And I didn't know if, market's going to go crazy or what.
Right.
And I just need a lot of capital for this property. So I haven't really invested a lot lately. I've just been, reinvesting my dividends, and that's basically it for the past couple of weeks. But I'm definitely in the near future going to, revamp that and start that back up.
Yeah, absolutely, man. And I mean, in a way, you are still investing because you're making your mortgage payment, and with every mortgage payment, you're building equity. And the way I look at that is, it's sort of like a savings account that you can't touch until you sell the house. So
Can I touch on the market thing real quick?
Yeah.
Yeah, because when it comes to, investing in general, that's one thing that I'll always get so much, right? Is I'm scared that the market's going to crash. I'm scared that, I'm going to do this and that. But, when we go to our jobs every day, because that's such a normal thing, is we have this thing programmed inside of our brains that we have to get a job. We have to, work for 40, 50 plus years, and then we can retire. But you take on so many risks every single day when you do that job. You take the risk of dying in a car crash. You take the risk of getting fired. Maybe you get laid off. So when it comes to putting money in an asset that can grow your money exponentially more than your job ever will with pay raises, yeah, there's always a risk. But with that risk comes so much great return. And even you can take on safe risks. A DGI method, if you're scared of real estate, if you're scared of the word flipping houses or whatever, you can put money in a super safe DGI that, yeah, it's going to fluctuate with the market. But if you look at the overall returns that the market can give you, that safety is still there. You just have to mitigate the risk with all the reward that you can get. And when it comes to just living in that constant state of fear, you're always going to have those safe returns. And that's another thing that I preach with everybody that I watch, that watches my YouTube channel, is when you always look for those safe ways to put your money, the safe ways to, live your life, you're going to get that safe return. And it's usually not good at all. If not you're losing money with the savings account.
You're never going to get out of the rat race unless you make some moves. Yeah. And I mean, with real estate, on average, it appreciates 3% a year. It's very consistent, and you're building equity every single year with that property. And just throw money into an S&P 500 index fund is what I preach, or you can play the individual stocks. If anybody invested in Tesla, man, they're pretty happy right now. I do.
Don't even get started on that.
I've been eyeballing Tesla for years. I've been looking at it and like, oh, should I? And I never did. And it's gone way up. And I recently put a lot of money into it. I recently dumped some into it now. I think it's still going to keep going up. Tesla,
like you said, when it gets added on the S&P 500, for sure. It's going to blow up.
I don't know why I didn't invest in it sooner. There's so many naysayers about it. And then another thing you guys can invest in, we didn't really touch on this, but is cryptocurrency. Are you doing anything with cryptocurrency right now?
So as we speak, I am getting money transferred, from my primary holding to BlockFi, which is just what we touched on. And for people that don't know BlockFi, it's just a platform that you can earn interest off the cryptocurrency that you choose to buy via, if you have like a Coinbase wallet or whatever you choose to buy your crypto, you can just transfer it over into this platform. And then you earn way more interest than you ever will with a savings account. Even, interest like 8.6, which is your average market return. So it's nuts. But as of right now, I don't. And I hate every minute of it because I remember I remember so vividly in 2016, right? 2016 when the Bitcoin just went through the roof. I had my Coinbase opened on my phone, and Bitcoin was probably a few $1,000s, and I was like, man, I have like 6,000. Do I really want to do it? I should have done it. I should have done it.
Dude, I know, man. I looked at it. I remember looking into it deeply in 2013, and I didn't pull the trigger on it. But after it saw the huge bull run in 2016, 2017, and it came crashing down, that's when I started investing in it. I remember I bought one entire Bitcoin for $4,000 in December of like 2018, I think, or maybe 2017. Yeah, and it's now almost $20,000. Now, investing in cryptocurrency is much more riskier because the places, since they're not the U.S. doesn't see them as actual currency, they see them as possessions. They're not FDIC insured. So if you have money in M1 Finance, your bank account, if that bank account or that bank goes bankrupt or they close down, the government will refund you your money up to $250,000 with the FDIC insurance. And they don't do that with cryptocurrencies. So if that company was ever hacked or went out of business or something, you kind of face a risk of losing your investment. And that unfortunately has happened years ago in the cryptocurrency spaces. But nonetheless, I have a lot of money in cryptocurrencies. I'm a firm believer that, the Federal Reserve announced that they are looking into creating a US-based cryptocurrency, a digital dollar, based on the same blockchain technology. And Facebook is coming out with their own cryptocurrency called Libra. And it's going to be a global currency. There is not controlled by any one country, or not influenced or manipulated by any country. And I honestly believe that cryptocurrencies are absolutely the future of currency. And Bitcoin is going to be $250,000, $500,000 a coin one day. So I do have quite a bit in there. We have a couple comments here. I don't want to, yeah. If you guys don't own any cryptocurrency, right now is the time. That market is about to explode. So agree, military and financial smartness do not go together. I'm retired Navy, 20 plus years, and the man in which I learned about investing back then, not just the TSP. Yeah, that's what everybody says, man. Everybody I know says, I wish I started investing sooner, right? You earn more from compound interest the longer that you're investing, and that's the truth. Joe says, I could stay in Texas, a state with zero income tax, and get more for my money, but there's not many jobs here that allow me to keep my security clearance. So yeah, man, if you are retired or you're benefiting, you're getting some kind of VA disability paycheck, I would absolutely consider moving to wherever like the housing cost is the cheapest. And I've thought about doing this myself, there's a lot of people who are retired. Let's say they get $2,000 a month. In DC, that's not going to go very far. But $2,000 a month in, Oklahoma or North Dakota, that's a full-time living right there. Yeah. And what are your plans in terms of jobs? Now, you said you may be getting out in the next handful of years. A lot of service members stay here in Maryland because we have a lot of great jobs here. You said you're going to go back home and try to find a job there?
Yeah, so with my plan with that is I'll be done with my bachelor's degree in March. And honestly, what made me start with this degree is just it was for free, right? The military pays you, tuition assistance, 16 semester hours every fiscal year. And I was like, man, I need to at least do it. So I got a bachelor's degree. It'll be in sports and health sciences. And I love fitness. I love working out. And I think what I'm going to do is at least do a part-time job with exercise, to be an exercise physiologist. I can take my exam next year. And that would just be, something that I can really enjoy. That's my 9-to-5 job. But then what my main thing I just want to go all in on is real estate, connecting, doing all types of stuff, wholesaling, fixing flips, buying holds. I really want to capitalize on that because I find a lot of passion in it. So I might do a part-time job with a normal W-9 or W-2 type place, but for the most part, I just want to go all in on, investing in general.
That's good, man. Yeah, I love that you have a passion about that, and that's probably a good segue to go over your channel here. So Austin does have a YouTube channel. He talks about finance. He talks about, you know, one of his most popular videos is going over renting versus buying a home, and Yoda. So Yoda is one of these, another free brokerage that he uses. So if you guys are not subscribed to Austin, make sure you go over there and give him some views, give him some likes and some love. And yeah, Austin, man, thank you so much for joining me today and talking about finance and investing and everything for service members. Any parting words before we head out?
Yeah, man, I really appreciate having me. This was awesome. It's really fun, and that's one of the reasons I love networking and YouTube in general, right? Is you can just meet so many crazy people. But if I have anything else to say to you guys, it's just stay grinding on your goals. Do not let fear, you know, judge your future, and just live every day, you know, like you have a goal in mind and learn something new.
I love it, man. All right, guys. And yeah, hold on. We got, it's that smart plan, Austin. All right, guys.
Appreciate
it. Happy holidays. Take it easy. Go give Austin a subscribe. See you, everybody. Bye.
See you.